4 secrets of the Toronto real estate market. 4 neighborhoods have seen 5, 6, 7, 8, almost 9% growth year over year in pricing. After we posted our last video, families living in condos, we started getting some, they're actually pretty funny comments. First comment, the person says, "What a terrible life for the kids. No backyard, stuck in a building like China." I don't even know what the last part of that comment is supposed to mean. Number one, your grammar's off. So to all those people who made the comments, check yourself. Average cost to maintain a condo versus a house, the spread isn't quite as large as some people make it out to be. Many of the people screaming out there don't maintain their house and let it fall into disrepair, but then don't come call me wanting to sell your house for top dollar when your roof needs fixing and your furnace hasn't been changed in 25 years. Hey there people, this is Josh, broker with Sage Real Estate Garrison Collective, and you are watching episode number 7 of the Under the Radar Real Estate Podcast. And on today's show, we are going to be talking about the 4 secrets of the Toronto real estate market. We are then going to dive right back into that debate about houses versus condos. Last month we did families living in condos. It created a little bit of controversy. We're going to dive into that. And then to wrap up the podcast, we're just going to talk about a few little odds and ends of what's going on in the real estate market, HST being removed from rentals, talking about that persistent inflation and how that's going to impact the real estate market, and then just general sentiment within real estate in the city of Toronto right now. So before we do all that, remember to like, subscribe, comment, call us if you have any questions about real estate. Don't be afraid to hit us up. All right, so let's jump into our first topic, the 4 secrets of the Toronto real estate market. So if any of you watched our market update from this month, you'll see that we had highlighted 6 neighborhoods that were seeing year over year price growth in the city of Toronto. For the most part, most neighborhoods, most areas in the city saw very, very flat year over year price growth, or even slightly decreasing prices. However, we noticed that 6 neighborhoods were actually completely beating every other neighborhood in the city. They were seeing 5, 6, 7, 8, almost 9% growth year over year in pricing. So because this channel focused on 4 of those neighborhoods, those 4 neighborhoods are the 4 secrets of the Toronto real estate market. And so what contributed to 4 of these neighborhoods kind of beating the rest of the city and region in price growth? So we identified 3 things that was influencing this price growth in these neighborhoods. Now, if you watch our channel, you'll have a good idea as to why we target a lot of these neighborhoods, and you'll understand why 4 of these areas of the city are seeing price growth above what's going on in the rest of the overall market. So the first thing is that in many of these neighborhoods, they're seeing lower average price, especially when you compare it to either the overall market in the city of Toronto or when you compare it to its direct comparable neighborhood. So if we dive into those numbers really quickly, so we'll look at the average in the city of Toronto last month, which was August. The average price in the city of Toronto was just under 1.1 million at $1,082,500 approximately. So when we look at that number versus these neighborhoods that we are targeting, so the neighborhoods, you can probably see on the screen right now, they're numerical in the city of Toronto. So it's W09, W04, W03, CO3 are those 4 neighborhoods. So these neighborhoods, they tend to follow Eglinton West up in, and then kind of curves up into Weston. Again, any of you who watch our channel know that those are the neighborhoods we tend to target as under the radar neighborhoods. So when we look at these numbers, we'll start with the ones further west and near Weston. So when we look at W09 and W04, so W09, the average price point being 1.23. So some of you say, hey, that's above the overall average in the city of Toronto. However, W09 is predominantly a detached home neighborhood. So most of the neighborhoods in W09, detached houses on large lots. The average price of a detached house in the city of Toronto last month was just over 1.6 million. So we're looking at a $400,000 delta in the average detached house price in W09 versus the average detached price in the overall city of Toronto. So when we look at the other neighborhoods, so when we look at W03 and W04, W04 is more Weston, Eglinton West. So those neighborhoods in W03, just under 960,000 as an overall average price. W04, 921,000 as an average price in that neighborhood. So again, significant savings over the overall average in the city of Toronto. Now, the one neighborhood that's going to look, I mean, it's going to look expensive when I bring it up, CO3, which was just over 1.609. Now, that's not because that neighborhood is mainly selling detached houses. That neighborhood has a very diverse housing mix, if you've watched on this channel before. So, I mean, the epicenter of that area is Oakwood. So you see detached houses, semis, townhouses, condos. You can pretty much get every house type in CO3. However, the best comparable neighborhood to CO3 is its neighbor just to the north, CO4, which saw an average price of $2.3 million. I'll say that again. $1.6 million in CO3, $2.3 million in CO4. So you're getting a massive savings over the neighboring neighborhood, and you're a couple hundred meters away. So you can see here again why we keep targeting these neighborhoods and keep regurgitating the same fact that these neighborhoods are very much under the radar. So that was the number one thing, was average price. The number two reason why we think these neighborhoods are beating the overall city of Toronto when it comes to average price increase is the strong rental price growth in these neighborhoods. So when we looked at rentals.ca, this area of the city was seeing about 11% year-over-year price growth, which was a massive number. So it's double-digit price growth in rent. Not so great for the tenants out there. Unfortunately, that's the unfortunate part of the situation that we live in right now in the city of Toronto and the overall country, is that rental rates are moving up. However, when we compare rental rates in these neighborhoods to the overall average in the city of Toronto, this is where things get interesting, and this is why I think we're seeing better price growth in these neighborhoods over the overall city. So when we look at the average price right now, and this is a little snapshot I pulled right now, in the last 30 days, it was about 3,800 properties that rented in the city of Toronto. That's just 30 days. So the average price of those about 3,800 rented properties was just over $3,055 as an average price. Now, when we look at the neighborhoods that we're talking about, again, W09, W04, W03, CO3, there were 177 properties rented in those neighborhoods in the last 30 days at an average price of $2,961. So we're only looking at about $100 price delta, but on average, we're seeing hundreds of thousands of dollars in savings in average price in these neighborhoods versus the overall average in the city of Toronto. So when we look at down markets, generally a lot of the activity we'll see are investors or people looking for opportunity buys, and a lot of investors are seeing a lot of opportunity in that northwest pocket of the city because you're buying properties at a much lower price and you're renting them out at a pretty much the same average price as the overall average in the city. So it really goes to show that from an investment standpoint, these neighborhoods make a ton of sense because you're saving on the purchase price coming in and you're getting the same amount of rent, so your yield numbers are much higher in this area versus the overall average in the city of Toronto. But now the third reason why we're seeing better, again, price appreciation in these neighborhoods and why these neighborhoods, we call them inflation busting in our market update, was that these neighborhoods are seeing tons of infrastructure investment. And we're not talking about future investment. We're talking about currently infrastructure that's being built right now in this neighborhood. So again, if you watch this channel, we talk about it all the time. You have the crosstown LRT cutting right through this area, going from Weston Road all the way into Scarborough. But I mean, the key thing is along this corridor, most of that LRT runs underground. So it's a subway cutting through the city, which means very rapid transit cutting right through this corridor. So that's being built right now. I mean, it's been delayed multiple years. Hopefully it finishes soon, but that's being built. Along with that, we're seeing the smart track infrastructure going in. The smart track that had been talked about and no one really knows what it is or what's going on. It's being built right now. So there's stations going up right now at Eglinton and Weston Road. There's going to be a planned station going in at St. Clair and Old Weston. And there's a couple of other stations that we're seeing being built along that line to increase the rapid access into downtown. And not only that, there's the Up Express that cuts right through this area as well. That's already there and operating. People barely use it. I mean, I ride it from time to time, especially when I have to go to Pearson. But I mean, those trains can be a lot more full. So there's infrastructure there, a lot of infrastructure coming. And again, if you're an investor or if you're a big pension fund, or we're seeing, again, we talked about in the updates we've done on Weston or Eglinton West, tons of big money is investing a lot in residential real estate in this pocket. And that's because the infrastructure is coming and a lot is already there. So again, those 4 secrets are those 4 neighborhoods, W09, W04, W03, and C03, 4 secrets of the Toronto real estate market that some of the investors seem to know what's going on there, but the rest of the general public is just wising up to it right now. So hit us up right now. We can set you up on a search of those neighborhoods, whether you're looking for a condo, a townhouse, semi-detached or detached, or even some commercial product in those neighborhoods. We can certainly help you out. Hit us up before the secret gets out and the rest of the people searching for real estate get into these neighborhoods. We can definitely get you in. All right, so let's move on to our second topic, the house versus condo debate. All right, so after we posted our last video, we had posted it to our various socials. It was getting some decent comments and calls and so on and so forth here and there. A lot of positive stuff, not too much negative. When we put that up on Facebook, oh boy, so we started getting some, I mean, they're actually pretty funny comments on Facebook. It's really a topic that seemed to hit a nerve with some people, right? A lot of older demographics, especially, they can't wrap their minds around a family potentially living in a condo. So we got a ton of comments. Let's go through a few of them right here. So the first comment is a funny one. So the person says, what a terrible life for the kids. No backyard, stuck in a building like China. I don't even know what the last part of that comment is supposed to mean, because there's people who live in buildings all over the world. Anyhow, that was a funny comment that we got. Another one, just simple, crappy way to live. Cool. And then another one was advertised family-sized condo, 950 square feet, 3-bedroom, really. Okay, number 1, your grammar's off. Number 2, 950 square feet is a pretty decent size for a condo. You should try it out. And then a person commented on that one, chicken coops, when you sit, your foot touching the TV and flying in the wall's bed. I don't even know what that means. Again, grammar is way off. But it just kind of, again, it goes to show you, when you post something like this, people have this visceral response, right? They don't like the idea for whatever reason. Now, if they actually, I mean, most people probably just saw the title of this video and commented, didn't actually watch the video. So a lot of these people, I would go to say, most of them regurgitate the same ideas, that it's living in a cramped space when you don't have a backyard, you can't run around and all this stuff, which, I mean, we've debunked before. I'll reiterate, most of these condos are located near parks, schools, and different places. So if you want outdoor space, yeah, it's shared outdoor space, but you can get it. Not only that, a lot of these places will have terraces and balconies and so on and so forth. So you do have some of your own private space. And not only that, when the person who commented on the square footage, last time I checked, when you live in a house, you are not occupying every last square foot of your house at all times. So, as an example, I used to live in a 2,800 square foot house. There were sometimes weeks where I wouldn't touch my basement, for example, where perhaps I would not even set foot in our den, which was set up as our kids' video game room. I wouldn't enter that space at all, sometimes for a week at a time. And most days, because we all live busy lives, the only places I would live in my house were my bedroom, my kitchen, and my living room. So out of that 2,800 square foot, I probably occupied 800 square feet 90% of the time. So when we talk about square footage, Yes, the square footage seems small, but if you actually think of your daily lives, you don't occupy every last square foot of your house. And then not only that, in a lot of these buildings that have amenities, you'll sometimes use these amenities, just like sometimes I would use the gym in my house. Sometimes I would sit in the den and watch a movie in my house. A lot of condos have a gym, have a TV room, have all these things that you use from time to time, so you can add that to the square footage. So to all those people who made the comments, check yourself. And we will continue this series on houses versus condos, and we will debunk a lot of the myths. With that said, for this segment of this podcast, we are going to debunk a few of the very basic myths about condos. So let's get back to the basics and let's get an understanding of what a condominium is, right? So a condominium is a building, generally apartment style. Sometimes you'll have townhouses, stacked townhouses. Stacked townhouses are pretty much just small condo buildings. So it's not, instead of a full townhouse where you're getting a full stack from the ground floor, the basement, all the way to the top, generally you'll have like 2 to 3 units stacked on top of one another that look like a townhouse. So that's a stacked townhouse. Other condominiums sometimes you'll get are loft conversions. You have an old factory or office building that's converted into residential. And then sometimes you'll get either detached, semi-detached, or what look like freehold townhouses that share a common element, whether it be the outside, or whether it be a shared driveway, or so on and so forth. And they all have condominium corporations attached to share in the maintenance. So the whole idea of a condominium is that it's shared maintenance. You share a structure, or you share a hallway, or you share a driveway or a walkway, and you have to share certain elements, and they create a reserve fund to pay for any potential fixes or repairs that come up with any of the shared portions of whatever it is, whether it be the building or the driveway or walkway, whatever it is. So one of the comments talked about maintenance fees that we had, and people, there was most of the commentary we had on both YouTube and Facebook and so on for those maintenance fees. So let's get an understanding of what maintenance fees actually cover. So when we look at the Condominium Authority of Ontario, they define common expenses, maintenance fees, known as maintaining the condo corporation's common elements, contributions to the reserve fund, and paying for services such as cleaning, building maintenance, condo management fees. So the reserve fund. So reserve fund is there to pay for it's pretty much your rainy day fund. Something breaks, you got to fix it, you dip into your reserve fund to fix it. When you look at your cleaning and building maintenance, so that's, again, pretty straightforward. You'll have cleaners, you'll have different trades that maintain different parts of the building, ongoing maintenance items, whether it be servicing the HVAC units, whether it be cleaning the windows, whether it be just a general everyday maintenance of the building, the hallways, the landscaping, so on and so forth. Pretty straightforward in terms of how those fees contribute to your condo fees. So how does the maintenance fee compare to your average house maintenance costs? So let's break it down one by one. So the reserve fund is pretty straightforward. Something happens, something breaks, you have to pay for it. So you pay monthly into a reserve fund to be able to pay for those rainy day items when something breaks. So when you have a house, when something breaks, you pay to fix it. Sometimes you don't pay to fix it, and your house can fall into disrepair. We'll get to that in a minute. Most people, they just pay for fixes as they pop up. Now, I always tell my clients as a realtor that you should be saving money every year for maintenance on your home. Not everyone does it, but you should do it. So those are pretty equal in terms of what it costs to maintain a house versus what it costs to maintain a condo when you break it all down. When we talk about cleaning and building maintenance. So this, when you look at a house versus a condo, in a condo you're paying for the convenience. Now, in many cases, people who own homes pay people to clean them, pay people to do the yard maintenance, pay people to shovel the snow, pay people to cut the grass, all that kind of stuff. The idea of a condo is that you're paying for that convenience. So it's built in to your maintenance fee. Now, if you pay people for all that already and you own a house, then you understand that can be fairly expensive to pay for all that kind of stuff, especially when you're doing it on a one-off. one house versus a large condo. It's a lot more expensive to pay a maintenance contract on a single house than it is for a large building when you break it down per unit. And the last one is the condo management service. So this again is a convenience fee that you pay in a condo that you may not pay for in a house. However, again, when you break down the condo management service per unit, especially in buildings with more than 100 units, the cost gets broken down a little bit, and it's not that arduous when you really look at it in the overall large picture. So when we look though at like your average cost to maintain a condo versus maintaining a house, I pulled up an article here from the finance expert at Golden Mail, Rob Carrick. Everyone who follows Golden Mail, Rob Carrick is very famous personal finance columnist, and he's usually pretty accurate with a lot of his articles. Yeah, he's not 100% right all the time, and no one is, but he's a pretty good resource. So he actually highlighted here that the average 2,000 square foot house costs between $1,400 to almost $8,000 a year to maintain. So when we look at the average cost to maintain a house at almost upwards of $8,000 versus a maintenance fee. So let's take a maintenance fee on a fairly average condo at $500 a month. We're looking at about $6,000 a year for a condo maintenance versus upwards of $8,000 for a house. Right now, it may not hit that top end at $8,000, but if we were to look at the median, which is, I don't know, around $5,000 or so, you're paying, a slightly higher convenience fee for a condo for that maintenance fee a year versus a house, which, and this is just home maintenance. This isn't including all the extra convenience things like hiring a cleaner or hiring lawn maintenance, all that kind of stuff, hiring all that out. So that $8,000 doesn't include all that. That's just general maintenance of the house. And we look at the city of Toronto, especially, where a lot of houses are 100 plus years old. I'm pretty sure most houses are probably near the top end in that $8,000 range or higher to maintain an old Toronto house that's been around for 100 years. Unless if you had it fully back to the studs renovated recently, your maintenance costs are probably fairly high. So there's a debate that goes back and forth when it comes to condos and houses and which one is more affordable and so on and so forth. In terms of the average cost to maintain a condo versus a house, the spread isn't quite as large as some people make it out to be. Unless if many of the people screaming out there just don't maintain their house and let it fall into disrepair. But then don't come call me as a real estate agent wanting to sell your house for top dollar when your roof needs fixing and your furnace hasn't been changed in 25 years and your AC hasn't been changed in 15 plus years and your walkway's all cracked and so on and so forth. You aren't going to get top dollar for your house if you try to sell it when it looks like that. And you'll see some of those sales called as is and you don't get top dollar for those. So whatever, to each their own. But ultimately, the maintenance fees, we can bust that myth today that it really isn't as arduous and high as some people make it out to be. You are, though, paying for a slight convenience with a condo, but that's the whole point of condo life is convenience. As we talked about in our previous video, even the trolls out there who didn't watch the video, watch it. You're probably not going to watch this one either. You're probably just going to see the title of this and comment, but hey, comment away. We love it. We love the views, love the clicks. Keep clicking, keep liking, keep commenting. We love it. All right, so let's wrap up this podcast. Let's talk about a few little quick tidbits that we saw in the news. So first off, we saw that the federal government is dropping the HST on purpose-built rentals. What does this mean? Well, it means a lot, actually. It reduces quite a bit of the cost of building new rental homes. Rental properties are expensive to build, and unless if it's public housing for the public benefit, the private sector, surprise, surprise, they are building rental properties to make a return, to make some sort of profit. But for years and years, that profit margin was so thin that even though we needed extra rental properties, they weren't building it because they weren't making a profit. And unfortunately, private sector, they're there to make a profit. So there has to be a profit margin. Removing that HST really increases that profit margin and hopefully entices more of the private sector to build more rental housing, which will then in effect create more competition and hopefully bring down those rental prices so more people can afford to put a roof over their heads. Another item we're going to talk about really quickly is inflation. Inflation numbers came out today. Inflation is up again. However, when we look at it, there's a couple of very smart people online that have pointed out right away that the reason why inflation came in at 1% is called the base year effect, because we compare numbers year over year. We are comparing this year's inflation to last year's inflation. So because inflation has been steadily going up, we haven't really seen a drop in inflation. We're comparing last year's number to this year's number. Simple as that. But there are a few other things that are actually contributing to elevated inflation. Number one is gas prices. The government needs to figure something out with gas prices. We can't keep them elevated this long. Talk about maybe perhaps the gas tax, maybe removing some of those taxes on there, just like they did with the HST build. Maybe perhaps bring that number down a little bit, because the fuel costs affect everything in our market, whether it be transportation of goods, so on and so forth. That's a large contributor to inflation. Another large contributor is housing. Rental rates are still skyrocketing. Mortgage, the cost to hold a mortgage is going up, right, with interest rates and so on and so forth. So they're going to have to figure something out there as well in terms of, right now, the bond market's pointing towards another rate increase. A rate increase will also mean more inflation, so we'll have to see how they deal with that. How does this affect the overall market? I mean, the Toronto market is still in flux right now. So we're seeing an influx of listings in the Toronto market right now. We're starting to see some neighborhoods starting to push towards a buyer's market. So I'd say right now, if you're looking to buy right now, in all videos I keep saying it's a good time to buy. It's never, I should say there's never a bad time to buy, but if you're in the market to buy, it is an interesting time to buy. What I would say to most buyers out there, though, is be patient. Don't just jump on anything. If a house is underlisted and looking for a bidding war, I've been telling some of my buyers to wait it out. If someone wants to pay top dollar for something right now, let them. I'm telling a lot of my buyers to go after the properties that don't sell on the offer night. A lot of the properties that have been sitting for 20 to 30 days. Because these houses that don't sell on offer night or have been sitting doesn't mean they're bad houses at all. It just means the market has shifted, there's more options, there's more inventory. So let's go after some of those properties that have been sitting, because you can kind of find value in some of those properties that maybe didn't sell right away at an offer date, or maybe have been sitting for 20 to 30 days. Sometimes they just have small issues. Sometimes it can come down to as simple as just being priced too high, and throw those people an offer. If people have their house on the market to sell, they want to sell. So there will be a number that they'll take. And you can create your own value, create your own market by looking at some of those properties that maybe have been sitting a little bit longer. And if you're a seller out there, I'd say just to be realistic. I mean, the market is what the market is. You're not going to necessarily get the highs of what we saw earlier this spring or the highs of 2021 because mortgage rates and so on and so forth. So as a seller, you can still get a pretty good number for your property as long as you're realistic with where the market's at right now. When we look at the overall market, anyone who purchased 3, 4, 5 years ago, you're still really in a good spot. So if you need to sell to move up or need to sell to move away, not a terrible time. I'd just say to just be realistic right now with where things are at. And if you're a renter right now, I feel for you guys, it's tough out there. I'd say if you're a renter, there are some brand new purpose-built rental buildings hitting the market right now. So if you're getting destroyed in the private market where landlords are being just disrespectful in many cases, many tenants out there demanding 6 months rent to rent and all these kind of things that aren't legal, but they're demanding it anyway because of where the market's at. I would say to look at purpose-built rental. Generally, those purpose-built rentals, they look at things very black and white, and the price that they advertise, the price you're going to pay. So I'd look at some of those options. If you need any help finding those options, hit us up. We can help you. We have a list going right now with all the new purpose-built rental buildings going on. There's a whole bunch coming up in some of the under-the-radar neighborhoods we've been talking about. So hit us up with those. So that's it for today's podcast. Again, subscribe, like, comment, hit us up. There's a Calendly link below if you want to chat. We're more than happy to chat if you're looking to buy, sell, rent, invest, anything real estate related in Toronto. Even if you just want to chat real estate, hit us up. We're more than happy to be your real estate resource here in the city of Toronto. Again, this is Josh, broker with Sage Real Estate Garrison Collective. Peace out.